What's up, guys? Doing a closing market update here. It's Thursday, and I this is a pretty big global macro, I think, pivot. So I kind of wanted to stress the importance of today's close and today's price action for a couple of reasons. Um, One, and cyclically, here, let me add my drawings here. If you guys, some of you that have been following my videos for a while, I talked about the 8.6 frequency. I mean, I always talk about that across different cycles, but specifically for a while there, it was cycling around Bitcoin off of the January highs for like 13 out of 14 cycles produced a turning point. And so sometimes a market will really fall in line with that rhythm. And so I went back and looked at it here on S&Ps, and this 8.6 frequency has been pretty much spot on. So this is a cycle that's not an oscillator. This cycle does great too. I want to talk about that in a second. But just counting out, it's eight to 9 days ebb and flow. All right, this is a daily chart of S&P futures. So we produced a high, you ebb and flowed back 4 or 5 days down, had a couple day rally, started a new cycle. We peaked with the high 29.47. 8 days later, you put in a double triple top, triple top right there, 8 count. Started a new cycle down, bottomed here just after the intraday low. This was probably actually the lowest closing relative to this one even. So that nailed the low. You started a new sideways cycle. You can see it here on the oscillator. And then that just rolled over into another, basically a 9 count into the lows here. And 1 count on the low. From the low produced a high 8 days later, 9 days later. And now today we cycled down to another 6 count. So pretty amazing, the turning points here. I've just shown this time and time again. If you look closely, the rhythm and the time elements are there. You just have to kind of look closely and pay attention. But my call from here is we sold really well into this move, which was kind of a painful day for some of you. Got over your skis. I talked about you have to bend your knees though sometimes before you leap, and that's exactly what we got. So good job sticking with your S&P shorts, your spider puts. We've been long the VIX. And today I sold out of all my VIX that I've been long since this last move. So this started, I went long here on, what is this, the November 19th. All right. And so, no, that's not right. I don't know how to read the dates. November 9th, sorry. November 9th, right in here on the turn. And we were shorting S&Ps. And today, I was coming into today flat, and then I resold one contract actually really crappy. I sold the break of the low. Sometimes that happens. But relative to what we were short up here, this was really light, flat coming into today, and then I reshorted one contract just to be short. But at that same time, I booked our VIX futures. So I took off all of this pretty much into the high. Last time we sold out of our VIX, I literally sold 24 right here. And so I think maybe this move might have, this for the intermediate term, maybe that was the low here. There was a lot of people focused on the inverse head and shoulders, kind of around 2,700. We broke it, but you couldn't close below. Remember, we talked about in our live room this morning, how you finish the day and the week matters. Yesterday we didn't close below 2,700, 2,702. Today you had an intraday violation and an outside day. So we made a new low, came all the way back and closed above the prior day's close. This was a really strong close for the bulls. You couple that with a daily cycle that was low. So my guys and gals, we talked about, you got to be covering shorts down here. This was a short covering opportunity. You have to be very cautious about pressing any shorts down here as the cycle is low. So this was a short covering opportunity. That was the right call. And now, if we peel back a layer with the bulls taking, like I just said, taking out the prior day's high. And you can see here on the shorter time frames, sorry, I've got the cycle blown out. Let me bring this down a little bit. This has been a nice downtrend on the near term. And if you just follow the pattern of lower highs, so I teach traders how to correctly identify the trend, and we call that our TMS. But right in here, these two levels, breaking here and breaking here, that's actually changes the near-term trend up now. So what I sold today, I was actually in the gym and I was talking about it. I think I tweeted it out that I sold, and I sold another contract here. I was a little cautious to sell another one at the bands. Had I sold another one at the bands, I probably could have got out at break even or a little bit in the money. And I literally was hoping to just cover a little bit lower, and then we just stopped at halfway. So my traders know that here's a bottoming tail, followed by a pretty strong move up. You retraced halfway of that move. I'm doing a lot of teaching here already in this update. You guys, this stuff is subtle, but look, bottoming tail at the bottom of a daily cycle. Okay, swing line setup, strong candle here. This is one of the stronger candles relative to, since here. Really, all the bullish candles, these on the near term here, this candle was pretty good size on the bear side, but other than that, the bulls have been putting up the bigger candles. And this puts in a wall here from the low to that high at the bands. So this is the TMS on the near term right here. And we pulled back about halfway, and right there the market held. Boom, it took off. So all the shorts like myself here intraday, we couldn't get any follow through. This is where I wanted to cover. I tweeted that out. You didn't get it. I even joked about I jinxed it. And then this is another real money candle, followed by another higher low. So this was a strong close. And you know what? Really since September, most of the day's action has been a weak rally in the morning, and then a really pitiful collapse into the close. Today was the first day we closed into the close pretty strong. It rallied into the close. Can't really talk today, I guess. So to sum it up, guys, I think you want to be covering shorts. So what I do, I stopped out on half of this short here. Just trying to show you so you can learn how to manage your risk. It's not always, cover, get long on the lows, make money back the other way. No, I came in flat. Yeah, do I wish I didn't hit them down here? Yeah. And, then I resold into this bounce. But at the same time, I sold my VIX out, so I booked a lot of gains there. I still wanted to have something on the short side, so I sold a little bit. But this sale here, getting above this high, I just took this off. I mean, I probably could have stopped a little bit better, but I didn't get back to the office till here, so it is what it is. But then, also what I did, because I saw this kind of shift on the daily cycle, this strong movement back the other way, we were also buying Apple calls yesterday pretty aggressively. So we had we had SPY puts that we rolled down this morning beautifully. I'll go over that in a second. So we covered a lot today. Got long some stuff yesterday. We try to run a portfolio both long and short. So we've been favoring risk off or being net short risk, or equity markets, being long bonds, being long the dollar. But we booked a lot of gains on our short side and then added to some of our longs. So maybe it looks like you have 8 shorts coming in and you have 1 long. Well, yesterday we moved this to like 2 or 3 longs, and then today took down probably about 3/4 of that to only 3 shorts type of thing. All right, and then today what I did in futures was covered half of this, so took some losses today here, gave some money back. But then I also went long the Dow at the same time, about right here in S&Ps. I went long Dow futures, and then I bought more Dow futures here on this pullback. So just like we play bonds, like right now I have a flattener on where we're short 10s and long 30s, short 10s and long 30s. This is back to my treasury days, so you can play both sides of the market a little bit, but we've been favoring being long 30s. Well, today I sold more 10s, so it's kind of a little, you start to feel that rotation in your book at the same time. So that's part of me getting the feel for maybe we're due for 2 to 3 to 5 day bounce from these levels. We'll see, but there is a little bit of a turn, so I'm trying to turn some of the book also. And in doing so now, I'm only short one S&P contract, if you were to put S&Ps over here. And now the Dow, I'm long 2. All right, so if S&Ps come back off tonight, maybe I'll get rid of this and just lean a little bit long like Dow futures to stop below the low. If we keep rallying, I might even take off this last S&P and then just let this Dow run and then maybe short S&Ps higher. I'm going to try to play these two off each other now. I'll try to signal that. Maybe you guys can kind of follow along and get a feel. So that's the turn I see in equities. I don't want to talk anything about FX other than cables just getting headlined around, just whipping around. But in SPY, I'll just talk real quick about the options that we did. So here's again that same cycle playing out where we're fading this move. Okay, we're short, covering, started refading back into it short, covering. Today we really covered almost perfectly. I mean, I was covering on the open right under the lows here. And by covering, I mean I was selling out of my puts. All right, and what I did, I didn't sell out all of my puts, but I had 275 puts that I was up like 100%. 272 puts were up 150%. 270 puts, big gains and all that stuff. And so the way I covered it or took profits was, let me just, I don't know, it might be a little bit hard to explain, but some of you guys are more familiar with options. If you're not familiar with options, you can take my course. I teach you my model, and I teach you not like the basics of options. You can learn that on the internet in a book. I teach you how to actually trade them in line with the model. So from a timing perspective, hey, when should I be shorting calls? When should I be selling puts? How can you put the spreads together, add and reduce? Anyway, I have a course that I offer that. What was I going to say? Oh, so what we did here is, so if I'm long 275 puts and I'm long 270 puts throughout this move down, okay? Obviously down here, there's a lot of money in those puts. So instead of just selling them all and then losing your position, by losing your position, I mean if the market were to keep crashing to the lows from a couple of weeks ago, you would be, you're sitting on the sidelines. So what I did was I booked these, and let's just say these were going, I can't remember exactly, but let's say these were going for $15, all right? And then what I did was called rolling down into a lower strike. This is 266 here. Let's imagine that 260 is down here. Okay, so I took my profits on these puts right here, and then I went and rolled down, so I sold to close these guys, and I bought 260s and I think another strike. But just to teach in this example, if I sell $15 contract and then I go buy, maybe these are only $5, I want to show you the power of rolling down. If the market keeps going down, these $5 strike puts will probably go to like $8 or maybe even $10, depending on time and everything else. But just for example, you're still going to make really good percent return going from $5 to $8 to $10 on a move. So if we keep going down, great. But by taking profits on these 15, if we did have a rally like we got right at the end of the day, had you not booked any gains here, this was probably a 30% move back, maybe even a 50% move back, depending on what the implied volatility did, because it really kind of came off. But let's just say 50% for easy math in this example. Would you rather lose, these were worth 15 guys, and then by the end of the day, what if they were only worth 7? You lost 50% there on that move back. you had gains there and you just gave back 50%. Whereas when I buy the $5, when I roll to the $5 puts and I get the same move back, 50% of 5 is only $250, right? So here you gave back $7, and here I only gave back maybe $250. So that's why I call it add and reduce method. It's our adding and reducing method. We're adding, getting more short, and then we're reducing our position into the lows. And this is one way you reduce your position into the lows. Anyway, just a little teaching on a Friday. I think you guys get my thoughts here. So be looking out for an oversold relieving bounce here. I think that's the risk. I mean, I've got some more levels to watch. I'll talk about you guys in the chat. I'll talk to you guys about it in the chat. Also, I'm in the process, you can see here, of redoing my website, and I don't know how to do all this stuff. I'm hiring a guy. We're working on it in the office tomorrow, but I'm just trying to put some of the feel and layout together how I want it. And if you guys go to jenkinsrm.com, this trading community button is not working. Maybe I can get it to go here this evening. But if you go to the chat room, I believe this link, I think I changed this today, so this should, if you click through here, guys, this should bring you into the chat room. If you try it and it doesn't work, then just keep doing what we're doing in these videos. I'll put the link to the chat room at the bottom of this video, and then also, if there's any issues, you guys can message me. If you want to join my room, if you're interested in my trading course or like the options I was just talking about, just follow me on my Twitter handle at @JasonJenkins. All right, at @JasonJenkins, and just request a message, whatever. I'll follow up with you, get you in the room. And now some of you might be clients already, and you're kind of wondering where the hell did the old room go. So we got a new one. All right, guys. I hope that helps. Have a great evening.